markets, right? We've got a guest waiting to chat with us. Let's begin the show by inviting Nimesh Chandan, CIO, Chief Investment Officer at Bajaj Finserv Asset Management, on the show. Nimesh, morning. Thank you very much for joining in. I believe this is our first conversation now on Trading Hour. So look forward to more such interactions. So let's start off by getting your view in on the markets. Is this a good time, to start investing lump sum? SIP is an ongoing exercise, but what about absolute return from here on? Good relative returns from here on as an entry point.
Good morning, Rima. Good morning, Survi. So we are quite bullish on the market. We track Indian markets both on fundamental indicators and also the crowd psychology of what we use as behavioral tools. And currently both are pointing towards positive. So we are seeing Indian macros being quite stable, corporate earnings growth being quite healthy, and balance sheets are quite healthy. And we are seeing as a long-term story, India kind of shining out compared to other peers in terms of growth and in terms of the runway for growth. So we are quite positive on Indian equities as well as fixed income markets. Globally, markets have been waiting for signs of slowdown in the US and finally some rate cut coming in. But we believe that in CY24, we will see this kind of a slowdown coming in and some kind of softening of rates. Maybe not in a very dramatic way, but at least we will see some pause and then maybe second half see some drift down in interest rates.
Okay, got that. Nimesh, hi, it's great to have you with us on the show, and we hope that these can be frequent interactions. It's early weeks and months in life as one of the youngest mutual fund houses of the country, right? So, good luck to you and your team for that. Now, I was just looking at the mix of the kind of equity holdings that you have in your existing equity offering, which is the Flexi Cap Fund, right? And what caught my eye was that apart from all the big blue chip boys that you have, the Reliances, etc. of the world, when I looked at the beyond Nifty 50 holdings, you seem to have a very interesting and healthy mix of consumer as well as engineering or manufacturing. And I just want to take some names for the benefit of our viewers. There's Siemens, there's also Devyani International that comes on the consumer side. There's Thomas Coke, there is Nykaa, there's Pratap Snacks. So all of these are the consumer stocks. But then you have a Genus Power as well. You have a Neogen Chemicals as well. You have a Sirma. These are names that really define Make in India, manufacturing, etc. So just take us through the thought process here.
So, Surabhi, our Flexi Cap Fund is based on a strategy called Mega Trends Investing. This is a Flexi Cap Fund. So we invest in companies across different market caps and across different sectors. But we shortlist our universe based on companies that benefit from long-term changes. And we identify these mega trends coming from 6 sources. So technology changes, regulatory changes, economic, nature or environmental changes, demographic and social changes. So we first map these long-term changes and then overlay them on each sector and select companies that can best benefit from these changes. So our universe, if you see, it will be companies that have a strong tailwind for growth or conditions which are very favorable for long-term growth. And these come through various different sectors and pockets. So you will see some companies in the power sector, some companies in the EMS sector, some emerging companies in the consumption sector as consumer discretionary spending keeps going up with the per capita income rising. So you see a healthy mix of companies which have a strong potential to deliver long-term growth to our investors. So that's the theme of the fund.
Which are the sectors you would recommend avoiding now?
So clearly, anytime a sector gets quite exciting and people tend to crowd in on that trade, those valuations become quite high. So some of the themes that we have seen going on in the past, say 12 months or so, whether it is defense, capex, power, these are all good long-term themes. But some of the companies in these sectors would have crossed their fair valuations or have gone beyond their bull case scenario. So when expectations are so high, and if there is a slight miss in delivery, typically you see a sharp correction in them. So while we are positive on these areas, but we'll be very selective in the companies we want to invest in those.
Nimesh, okay, now just coming back to your overall call, you're bullish on the equity market as of now. But let's say over the next 12 months or so, what is the prognosis? Near about 20,000, which is where we are now. Is there a greater case to see a breakout on the upside, given earnings, given the macros? Or do you see more of a case of maybe, a range or a consolidation? What's the overall equity call for the next 12 months?
There are 3 or 4 areas which give us a lot of confidence from the fundamental side that we will be seeing better times for equity markets. Number one, the earnings growth in the Indian corporate sector, if you take Nifty or BSE 500, has been quite strong. In fact, in our historical studies, we found that about 9 out of 10 times people consensus starts at a higher number or expectation and then downgrades throughout the year. However, this year, if you see in the first half, we've not seen downgrades. We've seen actually a marginal upgrade in earnings. Number 2, what we see is we are close to the interest rate peaks. And in India, I think we have reached the interest rate peak. From here on, we see better times even in fund flows coming in the fixed income side. So I'm not worried about interest rates rising further and putting pressure on valuations or balance sheets here. The third area we see is that India macroeconomy is doing extremely well. We are seeing also resurgence in terms of consumption, and probably this quarter you will see a strong pickup in consumer companies and consumption demand in this quarter. So, and then coming to valuations, where we are trading at about 18 times 1 year forward. Our numbers are slightly conservative, so we are close to about 18.8 times 1 year forward, which is close to the average. But considering the setup that we have today in terms of macros, in terms of demographics, in terms of relative positioning of India compared to other markets, we believe all the fundamentals are positive to pointing towards a higher intrinsic value for Nifty.
So just tell us a little bit more about the NFO, which opened last week on the 24th and is open till the 8th of December. It's a balanced advantage fund. So you will be investing in equities and even debt, fixed income. Talk us through the nuances of this particular fund and what's the expected return?
Rima, I'll tell you the model about the fund that we are launching. So this is a balanced advantage fund. As you rightly pointed out, it's an allocation fund between equity and fixed income. The difference that you see in this fund compared to the other hybrid funds is that we use not only fundamental indicators, we also use behavioral indicators in deciding our allocation. While there are 2 very important elements that move the market, fundamentals as well as crowd psychology, most of the people focus on only one. We've tried to incorporate certain behavioral indicators that tell us whether the market is turning bullish or turning bearish, and thereby helps us time our entry and exit into equities a little better. You will find that even if you give a certain data to investors, depending on the mood, that data is interpreted. If, say, we are trading at 18 times, in a bullish market, people would feel 18 is cheap. The high has been 23, 24. When people become fearful and become bearish, the same 18 looks expensive and people say, okay, the bottom has been around 12, 13. So all these aspects, we try to scientifically incorporate into a behavioral indicator, and we combine fundamental and behavioral to take decisions for asset allocation.
Nimesh, we'll leave the conversation here for now. Good luck with the NFO. Look forward to chatting with you more often. We'll get into a break. On the other side, we'll talk commodities. Manisha Gupta joins in next.